Welcome back to the channel. Today we're going to talk about some of the more popular order types used by traders and investors. So first, let's define what an order is. An order is basically an instruction to buy or sell a stock or security. Depending on your investment goal, that will dictate what type of order you will use. So the first order we're going to talk about is what's called a market order. This type of order means you want to buy or sell a stock at the current market price. These orders are executed instantly, typically, so that you can get the best available price at the time of execution. I would only use these orders in a very liquid and stable type of asset where the price action is really tight. Otherwise, you may get filled at a worse price than expected in more of the volatile markets or where the price is basically changing at a really fast pace. I don't really typically use market orders personally, but the next order I'm going to talk about is one of my favorites, and that is the limit order. Now, the limit order is extremely popular. This type of order means that you basically want to buy or sell a stock at a specific price or better. These orders basically give you more control over the price that you enter or exit a stock. And then, for an example, let's just say you have stock ABC and it's trading at $10.15 and you want to buy it for no more than $10. So you would basically set a limit order for $10 and the order wouldn't execute unless the stock reaches $10 or lower. Now, the same would go for selling a stock. Let's say you bought that same stock at $10 and you want to exit for profit once it reaches $15. You would set a limit order to sell at $15, and the order wouldn't execute until the stock reaches $15 or more. Now, keep in mind with these limit orders, you have the option to choose between day or good to cancel, which is also known as GTC. Day means that the order will remain in effect for only that trading day and will automatically cancel when the market closes. GTC means the order will remain in effect until it is executed or until you cancel it. Okay, so the next order we're going to talk about is called a stop order, also known as a stop loss order. And basically, this is an instruction to buy or sell a stock when the price reaches a certain level called the stop price. Stop orders are typically used to limit your losses or protect profits. So, for example, if you own a stock that you bought at $50 per share and you want to limit your losses to, let's say, 10%, which would be $5, you can set a stop order at $45 per share. And if the stock price drops to $45 or lower, your order will be executed and you'll sell the stock. Now, stop orders can be triggered by a market or a limit price, and that depends on your preference. Now, another kind of example or another type of order that's sort of like the stop order is what's called a stop limit order. And this is basically a combination of a stop order and a limit order. It means you want to buy or sell a stock at a specific price or better, but only after the price reaches a certain price level, called the stop price. Stop limit orders give you more control over both the execution of the price and the risk level. For example, if you want to buy a stock that you believe is undervalued, but only if the price rises above a certain level, you can set a stop limit order to buy the stock at $60 per share if the price reaches $65 per share. If the price never reaches $65 per share, you won't ever get executed. But if it does, you'll get the best available price within your limit price. So always remember to review your orders before submitting them and monitor your trades regularly to make sure that they're being executed as planned. I'm going to jump over into Webull and show you how the order screen looks on Webull so you have an idea of how that looks. All right, guys, so we're back in the Webull platform. I did want to come over to the Webull platform to show you what an actual trade order form looks like. For pretty much all of your brokers, like your Robinhoods, your TD Ameritrades, your Webulls, Fidelity, your E-Trade, or what have you, all their order forms are going to look somewhat similar, have mostly the same type of options. But let's just briefly go over what it looks like and kind of play around with the different options we have. So right now we're on the buy side, and that's why it's green. If we click on the sell side, you'll see that everything kind of turns red. Let's go back over to the buy side. We talked about order types, and this is where you're going to find the various order types. Now, there's the limit that we talked about, the market, the stop, order, stop, limit. There's also something called a trailing stop. It's a little more complicated, and it essentially will start to kind of trail you out of a trade that you're in, but it will do it in increments. We'll talk about that in another video. This right here is going to be your quantity. So it's going to be how many shares that you're buying. If you're going to be buying in shares, you can actually click on this and change this to a percentage. And so if you want to, buy a certain percentage of your portfolio, you can do that. You can also change this to dollar amounts. And so if you're looking to maybe buy fractional shares and you want to buy, $100 of Ford, right now we're looking at the Ford price. And so say you wanted to buy $100 of Ford, you would just go ahead and enter $100 there, and it would actually purchase the amount of shares that will be equivalent to that $100. I typically keep it on quantity. I like to, know how many shares I'm holding. So that's something that you can also customize here. Right now, I have it at 10, 50, 100, and 500 as my customized amounts, but you can actually update and change this to whatever numbers you like. Now, right now that we're on limit, you see that this is a limit price. And basically what it's saying is that I'd like to buy Ford at a price of $11.90 or better, meaning $11.90 or less. And this is the time and force section where we talked about GTC, or good to cancel, or day. And so that really just depends on what you're looking to do in regards to your purchase or your entry for that trade. Here is where you can actually enter stop losses and take profit orders all at one time. And so if these are checked, then you have the option to put in your price that you would like to get out. So say if I do get into Ford at $11.90 and I want to get out at, if it drops to $10, I would go ahead and put $10 there and say my target is $15 as a exit. I will put my limit price to exit there. And what it's going to do is going to break down your estimated P&L if you did take the loss, which is a loss of $1.90 from that $11.90 price down to 10. And then this is your estimated P&L if you did take profit at $15, and that would be $3.10. And this is based on one share. Okay, so if I change this to 10 shares, you're going to see those numbers increase. So now at 10 shares at a price of $11.90, if I took a loss, but if the stock dropped to $10, I would lose $19. If the stock went to $15, I would have a gain of $31. So you essentially just want to make sure that you're, setting those to the percentages that you're looking to get, and also keeping your losses low. Now, at the bottom here is going to also show you how much buying power you have, your max amount of shares that you can actually buy with that amount of buying power. This is my small account that I'm not even trading in right now. So I have about 94 bucks in here, and this is telling me that I can buy 7 shares with that amount. And then once you pretty much get everything in order and you feel as though this is how you want your trade to go, you would hit the buy button. And essentially what would happen is a order confirmation screen would come up and would just reiterate what you've entered to make sure that you are good with the trade, and then you would just hit OK and keep it moving. Now, if you didn't want to have these, you can always uncheck them, and then that would just leave this blank. And essentially this would just mean that you were setting a order to buy the Ford stock at $11.90 at a limit order type, which means you are going to get executed at $11.90 or better. And this is a good to cancel, meaning it would be good until I cancel it or until the trade actually is executed. And then the extended hours, if this is checked, this means that your order will also execute in pre-market or aftermarket. If this is no, then you will only get filled if the order meets your exit, your desired entry or exit during normal trading hours, which is 9:30 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time. The same thing goes for selling. It's just literally the opposite of buying. So if you've already bought something and you want to get out of that trade, you want to go ahead and sell it. Same options are there for the order types. Same thing applies for extended hours and time in force. And also the same thing would apply if you were to look to take profit or do a stop loss if you've entered a trade as a sell, which is a more complicated strategy that we will not get into today. So I hope that this helps. As always, please like, share, and subscribe to the channel. If you have not signed up for your Webull account yet or any brokerage account, I will have a link in the description below. You can sign up with that link and you can get up to 12 free stocks. And hopefully you all have a great rest of your Sunday and happy investing. I will see you in the next video.